does seem that gold tends to start the year quite well. And some people would say this is seasonality. We're approaching a peak demand season in China because of the new year. But I also think it's because we've had a lot of bad years, and so a lot of speculators are very short. In fact, the speculators on COMEX were the shortest they've been since 2001 in December. So you had the fuel for a rally, and as you say, what's given it this spark is the equity market.
The safe haven rallies, though, that we usually see, whether it's in gold, whether it's in treasuries, the yen, Swiss franc, they're usually very short-lived. So does it make sense at this point, if you're an investor, to be building up your positions in gold, given that we're still in a year, 2016, where the dollar bull run is set to continue, and we might be reminded by that once we get the jobs report later on today?
Yeah, I mean, our view was we'd see a Q1 rally. We thought it would go a bit higher than this, to maybe 1140, so we'll have to wait and see on that. But we think Q2 could be difficult. Then the Fed will be approaching its next interest rate rise. Inflation's going to be very low because the oil price is so weak. And so I think the problem with these safe haven rallies is a good problem to have. Things don't always get worse and worse and worse and worse. They have to get worse and worse. And at the moment, or in the past, they've got worse and then better. And I think, if you want to take a longer term view, then, and if you're worried about equity markets being overvalued, and if you're worried about the Chinese economy and the yuan, then a gold position makes sense. But I don't think we're going to see a big rally in the short term.
You just mentioned the yuan concerns there, but it's really not just the yuan. There's already been quite a bit of talk around the threat of a currency war triggering off across emerging markets. If we get other countries in Southeast Asia and the EMs effectively exporting deflation, and that dramatically brings down the Fed's inflation forecast, isn't that yet another reason to buy into gold?
It's interesting, isn't it? I mean, inflation, deflation, both are given as arguments for gold. Currency wars, however, definitely a good reason. I mean, this time last year we had the Swiss franc move, and gold saw its best rally of the year. More of that for gold bulls. Yeah.
And do you expect the bigger factor then to be perhaps if we get, let's say, a major downside surprise from the jobs report, could that dramatically alter the Fed's rate hike timeline, or do you think they're pretty much set and they want to keep this tightening going?
Our view on the Fed rate hikes is actually quite hawkish. We think there will be 4 this year, as the Fed says, but I would point out that the reason we think that, and the market thinks there's going to be fewer, is because we think inflation is going to pick up faster than expected.
Right.
So real interest rates will remain low. So we don't see the Fed hiking cycle as that bad for gold. The non-farm payrolls is always a bit of a random occurrence, and the rallies or fades tend to get reversed quite quickly. But I think people are getting pretty bullish about the US economy again.